Alright guys, welcome to Trading with Emotions. If you guys have seen my videos on this flag that we broke out of, I did talk about how they were doing this to delta hedge their positions on these option expiration dates where these flags end up closing up or down. So with this being said, guys, we can actually go back in time to the January cycle here. So they had this same structure where we would come up and create this flag and then break to the upside or the downside. So I've labeled here in white would be basically the cycle that's reoccurring or the run up, and in blue would be the first flag, yellow the second flag, red the third flag, and then green the fourth flag. And green is the flag that we broke out of, right? So the fact that we are able to take this pattern and replicate it up here, it might not look the same to you, but when we take this pattern and we stretch it out to create what is this flag over here, we get the inverse version of this flag. And we have a 1, 2, 3, 4, and then break down instead of a break up. The crazy thing here is, if you've seen my past videos, I keep stretching this pattern out right on top here because it's almost like a puzzle. It almost like fits in perfectly. Like this run up right here is the inverse version of the January run up. You're able to create this same pattern here on a macro level. You're able to recreate that with this cycle that happened back here. So what's up with this? We come back here to the smaller flag, and we know that they tried to keep the price at around $10. On the bigger scale here for the June run-up, we know that they tried keeping the price at around 40 for delta hedging purposes. So the interesting thing is that instead of breaking to the upside, which is what everybody thought was going to happen, we broke to the downside. So why did we break to the downside? They've planned this out ever since this happened, because this was synthetic price action, okay? It was them using dark pools to gather up this volume that they've been keeping in these boxes stored away. That's one way you can look at it. And then all at once push all of these shares that they have to cover to repeat this cycle that's happening, hoping that one day you will sell and they won't have to cover in the end. So this is just me showing you guys the correlation here that's happening. Why did we break to the downside? And why are we breaking to the upside here? Okay? That's all this is. This is just showing the correlation between these two. History doesn't have to repeat itself in identical form. It could repeat itself in inverse form, especially with these manipulated stocks. Remember, the inverse version of these stocks, when it runs up is when the shorts are covering some of their positions. But when it runs down is when they're shorting those positions. So if you think about it, the inverse version of whatever is happening is the opposite of what they did in the past. So if they shorted it in the past at a specific point within the cycle, they're going to have to cover it at a specific point within the cycle. And when they cover it, the inverse is happening. So that pattern is being flipped. That is just how it works with manipulated stocks. We can use technicals to make good predictions as to when something might happen, but we can't put all our faith in that. We can't just rely on this and say, okay, this pattern that I stretched out means that we're going to squeeze ends of January. We're going to squeeze just like we did with GameStop and AMC last year. No, we can't do that. We have to be careful. We just have to understand the behavior of these patterns and why they're repeating in that way, and then make a better judgment as to, okay, maybe it's a good idea to go in here when I see it start getting support at these levels. And we have to put all this information together to make good decisions in the end. So yeah, that's basically it, guys. There's really nothing else to it. I'm going to be posting more videos on the cycle, on why the cycle works, part 2. And stuff like that, just so you guys can see things from a different perspective. That's kind of the goal with this channel, is I want you guys to understand everything in simple terms, a different perspective, because we are given a 2D graph data information, and that doesn't mean that you have to look at a 2D graph all the time. You can play around with the graph and look at it differently, and that'll open up new perspectives that you can play with and sometimes make better decisions in the market. So yeah, that's kind of the whole goal here. But yeah, guys, thanks for watching. Comment, concerns, anything, leave it down below. I'll answer, okay? Alrighty, guys, take it easy. Bye bye.